Wonderful, thank you very much. Hello everyone, good to meet you. So I'm Digby, Sowerby, originally a farmer's son from up in North Lincolnshire, just in between Grimsby and Scunthorpe. I joined Environmental Farmers Group about 3 years ago as their first employee, just as they were setting up, and have been there ever since. I'm going to run through Environmental Farmers Group, the history and a little bit about it, and then move on to more natural capital stuff. How many people have heard of Environmental Farmers Group out of thing? Okay, that's good. And so originally it was set up, we've got a group of farm clusters down in southern central England in Hampshire who all came together with the Game and Wildlife Conservation Trust about 4 or 5 years ago. Ultimately they looked at BPS coming off the books. We had £37 million of BPS payments paid out in the Hampshire Avon, for example. And at the same time, we had the natural capital markets emerging, especially in this area through strong housing demand. So we have a nutrient neutrality market, which is where developers pay for water quality benefits that farmers can provide in that area. And so what they decided is, because we've got this really good group of farmers together, that they'd create something bigger that could do stuff on a more landscape scale. And so they created essentially a cooperative called the Environmental Farmers Group, which is where members could join, become a member, and then trade through the cooperative, really to give scale to everything. In terms of how the model works, so ultimately they wanted to set up a cooperative that was run by farmers for farmers. They wanted a single point of contact for market, so of course all these opportunities are happening, but how on earth do individual farmers access that market? Having a single point of contact for the buyer was going to be important. They wanted to build a simple, fair and viable financial model. So we didn't want to rely on grant funding. We wanted to have this as a self-sustaining model so that it could last into the long term and be properly sustainable. And then also the key thing really behind the cooperative is that farmers hold weight in the market. So we're not price takers, we're price setters in the market and really leading the way on this subject because no one else was doing it at the time. Members pay £1.25 per hectare per year to join the cooperative. With that £1.25, they become a member. They get advice on natural capital opportunities, what there is available and how to take those opportunities. You commit to trading through the cooperative. So key part of the cooperative is that you trade through the cooperative so that you don't undermine other farmers in the market. And we'll come on to why that's important in a second. And then finally, you share 12% of your income on a trade with the other farmers in the area to thank them for providing the buying power that you get together as a cooperative. 3% of which goes back to the cooperative itself to pay for it, and then 9% which goes back to all the other farmers in your area on a per hectare basis. You also get any surplus that the cooperative makes as a whole. So if the cooperative does well and makes profit, then that goes back to its members. Example of membership. So this is a 206 hectare family farm. A guy's called Peter Shallcross down in Wiltshire. He pays £257 a year and has access to membership. This is his farm, very heavy soils. Here has dairy and arable. He's paid so far £1,200. He's been here right since the beginning, 2022. And so far on the returns in terms of the equalisation and the subscription fees, he's got back 747. So what we're trying to do is build this number on the right so that that's going to be more than the number on the left. But we think that's going to take time because the markets have been much slower to evolve than we'd hoped. He has also himself done 2 natural capital trades. So this is both in the nutrient neutrality market, but he's brought income of £99,000 based on 2 development trades that he's done. And then, so how have we grown so far? So this is what we look like. So that map on the left shows how we've grown. So as you can see, we started in that southern central area. We've got a big group in Northamptonshire, Leicestershire, Lincolnshire area, another group in North Lincolnshire, North Yorkshire, and then a few other places as well. In total, that's 400,000 hectares of farmers. That's about 4% of England's farmed area, and we think that's larger than any other organisation. So if you're looking at Crown Estate, National Trust, Forestry Commission, that's bigger than all those other organisations that are essentially competitors in this market. And we've got 76,000 hectares of membership as well. The rest being expressions of interest. In terms of trading, we have a live inquiry pipeline of £53 million. So what we're finding is there's lots of inquiries, and I'll go through that in a second about some of the live inquiries that we have. But £20 million of that is from about 50 individual developer inquiries looking for natural capital for their development. I'll come on to that in a second. And about 30 million of that is to do with strategic infrastructure projects, where they're looking to purchase biodiversity net gain for strategic infrastructure projects. And then so far we've completed on 1.5 million, which has all been in nutrient neutrality at the moment. I'd say maybe 10% of that will convert. We get loads of inquiries and developers are just scouting the market, which again is really important why farmers try and work together in this space. And then finally, what we're trying to do is trying to build an idea of what individual farms want to do for the environment on their farm. So when you become a member, we try and do a farm plan. So sit with a farmer to identify what sort of environmental things they want to do on their farm, build that into a database, and then identify private finance to be able to take those opportunities forward. At the moment, we're quite limited in those, and I'll come on to that. But in the longer term, we think that's going to be really powerful. So far, we've identified over 5,000 hectares of land that farmers themselves want to put forward towards projects, and we're in the process of registering 375 hectares of projects as well. And then, why do we think collaboration is really important? So, firstly, to have an impact. So, if farmers don't work together, then we're never going to be able to solve some of the issues that businesses have. If you look at flooding, if you look at water shortage, people need to work together to be able to achieve those. To meet demand as well. So often buyers are wanting a lot, and often individual farmers aren't able to provide what they need. And so by working together, farmers are able to reduce their risk and provide to meet demand. And then finally, to ensure a fair return. So like I said, becoming price setters, having weight in the market. Moving on to natural capital side. So the government essentially is moving the burden of paying for environmental stuff to the private sector. At the moment, the budget for ELMS is, Gary, about 2 billion, possibly, something like that. But the government have committed to getting 1 billion of private investment into environmental projects from the private sector by 2030. So that's its approach, is to shift it onto the private market. And farmers can be able to provide natural capital by doing environmental projects. And essentially, you've got ecosystems and you've got ecosystem services. So historically, the government are more paying for ecosystems, so doing a woodland, doing cover cropping, etc. Whereas going forward, private markets want to buy the ecosystem services. So that's the water retention that cover cropping can produce. It's the soil carbon that cover cropping can produce and other things. And so that's the shift in how things are going to be done. And so moving on to the main opportunities that we see. So we think realistically there's 3 opportunities that are available to some farmers now. So the first one for us, and the biggest one, is soil carbon. So corporates across the world have signed up to different voluntary market platforms, such as the Science Based Targets Initiative. And essentially that is to manage their way to net zero. And so they commit to reducing their emissions and then purchasing a small number of offsets to get themselves to net zero, because of course some companies will never be able to get their emissions to zero. This opens an opportunity because farmers are able to store carbon in soil, woodland, essentially above ground or below ground. And farmers can bring projects forward by registering those projects through a soil carbon program. And those soil carbon programs essentially provide a valid way to structure, design, register, and trade credits. EFG's role in this market is scale. So 2 years ago now, we had an investor that we sat down at the table with. They wanted 100,000 tonnes of carbon per year for 3 years. Now, an individual farmer is never going to be able to provide that level of carbon, and so by working together, that is something that the cooperative will look to do into the future. So far, we have 18 projects going forward across the country, and we're looking to get 15,000 hectares of membership into soil carbon this year. But we're really pushing hard on that because we think that's a key opportunity. I'll come on to a case study in a second. We've reviewed over the past 3 years all the different providers in the market, and we have come on to 2 that we think are legitimate and good to go for, which is Ecometric and Regenerate Outcomes. And so we're advising members, if they want to go ahead with soil carbon, to go with one of these 2 of these providers. And the main premise behind that is because they use a measure and remeasure approach. So they physically measure the soil in year 1, they physically measure it again in year 2, 3, 4, or 5, and then it's the difference between those 2 that can be traded with the market. And that differs from other platforms where they use a modelled approach, which is more, if you do this, then you get that, if that makes sense. Okay. Next, biodiversity net gain. So everyone's probably heard about this. Until the cows come home, developers need offsets for their development. We think this is a very limited market. Demand is patchy here and there. Most developers are able to do this on site. However, there are some unique opportunities, especially when we're looking at strategic infrastructure. Farmers can bring projects forward where they change an existing habitat. So if you took something from, say, arable to grassland or woodland, or by improving the condition of an existing habitat, so having a poor quality grassland going into a good quality grassland. And by doing that, you can create biodiversity units. You have to register through Natural England. It's an expensive process. It costs maybe 20, 30, 40,000 pounds at risk up front. But there are mechanisms to make sure you're not risking the land. So far, we have 17 projects that we're bringing forward across the country. But in most areas, we don't want to bring any more projects forward. And again, this is another key role of the cooperative, is to reduce competition in the market. Because the more farmers we can have working together through one supply funnel, we can advise members not to bring projects forward and therefore reduce competition. So for example, in my hometown in North Lincolnshire, we've got 5 farmers all bringing forward projects, 3 of which aren't in the cooperative, 2 of which are. And that, if all 5 are in the cooperative, then we're going to have a much better opportunity not to compete in that marketplace. One interesting demand we have in this area at the moment is a nuclear fusion power station near Gainsborough up in Lincolnshire. So they require between 1,000 and 1,500 BNG units for their nuclear fusion power station over the next 5 to 10 years. And again, they're going to need 6 or 7 biodiversity projects to be able to make that happen. And then finally, I won't speak about it too much because it's only relevant to certain areas and not so much this area, but nutrient neutrality is essentially where developers pay to offset their impact on water quality. This is where we've got most of our activity down in central England here, and we've traded quite a lot from the projects that we've got registered down there. Okay, I'll quickly go through case studies. Am I all right for time? Yeah, okay.
I'm not watching it.
Okay. So this is an example of soil carbon. So this is a farm down in Wiltshire, a 400-hectare arable farm. They decided that they wanted to do soil carbon. They've gone to do Ecometric, farmed by Velcor. What they've done is they've done the intense sampling for a start. That's 3 cores per hectare. They've been doing a load of practices over the past few years, cover cropping, reduced tillage, integrating livestock, etc. into the farmland. They've done a baseline in 2024 and they've redone it last year in 2025, and they're producing 1,200 carbon credits from that. And then if we look at how that works financially, so looking at about 3 tonnes per hectare, we usually use 2 or 3 tonnes per hectare. They're getting a gross income of about £180 per hectare. They actually did more than this. I was just using a more realistic number. £180 per hectare. When you take off all the costs, that comes down to about £115 per hectare. And so, although that's not very much, when you scale it up in terms of the scale of the whole farm, that's looking, I can't remember the maths, I think it was about £46,000 for the whole farm, which again is looking relatively similar to BPS or some of these sort of payments. And so that's why we think it's really worth looking at soil carbon. Biodiversity net gain case study. So this was the guy that I spoke about before, Peter. He's got 206 hectare mixed farm. He had this field here, woodland on both sides, quite environmentally minded, always wanted to connect up the two woodlands. And so this has given him an opportunity to do that. We designed this project, so we're creating a woodland down the middle with a bit of scrubby bit either side, and then grassland either side, and then a pond down at the bottom to connect up the two habitats. 7.5 hectare project altogether. So he commits to doing that for 30 years, and he'll generate 38 BNG units from doing that, which is not actually that many in the grand scheme of things. But when you're looking at gross income, if he sells 80% of those BNG units, then he could earn a gross income of £120,000 per hectare, which is a gross margin of £77,000 per hectare. But again, this is based on selling 80% of the biodiversity units he creates. And we don't think he'll sell those straight away. We think it'll take probably about 10 years for him to sell all of those. So you're getting the income in dribs and drabs over 10 years. Does that make sense? I think, yeah. I won't go through this one, conscious of time. This is a particular opportunity looking at temporary nitrate credits, which is a 4-year project that we're doing elsewhere. This is our completed trades pipeline. So these are the trades that we've completed to date. So what we found is that everything has sort of gone to projects where we've got a registered project. So where a project is registered, we get demand. So a lot of this is to do with one of our big strategic phosphate projects. And then 3 of them are to do with other phosphate projects located in the area as well. And then this is our inquiries to date for 2026. And so I printed this off a couple of weeks ago. But you can see the sort of demand inquiries that we're getting. It's quite interesting in terms of, you know, phosphate, nitrate, BNG, and sort of the quantity. For us, a lot is phosphate because we've got that project registered down in the central southern region. And then there's a map and spread of the inquiries. And again, you can see where we've got members, we've got more inquiries. It makes sense, really. And then looking at the opportunity going forward, so we see really 3 main themes. So firstly, regulation creates markets. So we think more regulation will come in because essentially the government has legally binding targets to deliver for the environment. So it will bring in more legislation over time. But that's going to be slow and it's going to be bureaucratic, just like biodiversity net gain is now, just like nutrient neutrality is now. The second main driver is going to be business need, well, it's clearly, but flooding, water, supply chain, those are really the 3 big themes. And so addressing that business need is going to be the key to these markets going forward. But to be able to achieve that, aggregation is critical, and we're starting to see more and more aggregation in the market because, of course, Tesco can't pay for a whole flood risk management project. It probably can, but it needs other people to come in with it to be able to pay for that project. And equally, one farmer is not going to be able to solve the flood risk issues of Tesco down the road. And so we're bringing together supply. There are others out there as well. And you have certain initiatives who are setting up to bring together the demand. And the other element is that you've got investors now really getting involved. And I'm seeing there's literally hundreds of millions of pounds from investors going in to these sort of models to be able to pay for the upfront costs of the projects, which are then paid back by the companies over time. And then so just to summarise at the end, we really firmly believe that natural capital is the direction of travel. We know that the money and the burden is going to shift onto the private sector. And so we think that is going to happen. Scale and collaboration, we think, is crucial to be able to access and compete in this market. And so we think it's really important to work in groups and work together. And we have built EFG just to do that. And really what we're trying to demonstrate here is farmers leading on this subject rather than just taking the butt of whatever comes down the line that everyone else has organised for farmers. And thank you, Gary, as a sponsor as well.
So we are proud sponsors, yeah, with others, of course.
With others, thank you.
With others. Thank you very much, Digby. Yes, and yes, so so Julie Robinson there and ourselves were involved with helping put the whole structure together, weren't we? Yes. some time ago as a cooperative. Sorry? Yeah, yes, a couple of questions. We'll have a discussion at the end. Are there any questions for Digby at this stage, please? A few, yeah. Sam? Oh, yes, we need a microphone, yeah.
Is it working? Yes.
We're professional here, Sam.
Thank you, Digby. That was very interesting. So my name is Sam Franklin. There's quite a lot of political turbulence at the moment, as I'm sure you're aware. The current incumbent in 10 Downing Street is not very popular, and there's another party on the right who are much more popular, though I don't know what their chances would be in an actual election. Do you think, given some of the political uncertainties, that natural capital, BNG and similar will stay with us long term if we have a radical change of government?
I get asked this question everywhere I go. Yes is the answer that I give always. Yes, the policies might be tweaked and move around. Biodiversity net gains in primary legislation, and Julia, I'm going to look at you, but that means that it's quite hard to change. So government have recommitted to that, looking on the here and now basis. Nutrient neutrality is being affected by a load of policy change as well at the moment. But ultimately, it's this business bit, which is the important bit. Ultimately, it doesn't matter what government you get in. And speaking to one of the directors, who is a guy who set up the Chicago Climate Exchange, speaking to a broker, a carbon purchaser, what they tell me is that businesses just see the politics stuff as going on and changing here, now and everywhere, but they're looking at long term. They've got their net zero targets, they're committed to them. They think that's important to hire people for their public image, and actually they fundamentally are measuring the risk to their business in their accounts and reports. So that has longevity from what I see. Yep.
Thanks, Digby. Was this another question? Over here. Yep. You're on.
Is it on? Yes. You mentioned a nuclear plant up near Gainsborough.
Yeah.
You said fusion. Did you mean fission?
No, I think I mean fusion.
Fusion?
Yeah, I do mean fusion. Yeah, it's going to be the only one in Europe.
I don't think it's not proven yet, though, is
it? No. This is going to be essentially what they're trying to do is prove it and create a commercially replicable model that they can then roll out elsewhere. But it's a massive long-term project. But it'll be the only site in Europe, I think, nuclear fusion site in Europe. It's the West Burton Power Station.
Thank you.
Okay. Good. Thanks, Digby. So, yeah, that's fine. So, thank you very much. Shall I just press ahead? Yeah, good. Yes, good. Thanks, Digby. So yeah, we are sponsors of, and we've been helping from the beginning to get this going. And the local group is in Northamptonshire, chaired by Johnny Waker, Courting Hall. Yeah, and so when we've had various meetings at Courting Hall and around that area, Boughton as well, with